went from 64,000 to 29,000, went back up to 69,000. We shot back down to 32,000. There's a lot of volatility this year. Number one, are we in a bear market? And I want to talk about the current state of Bitcoin essentially. So let's kind of like dive into where we're currently at, what's happening, and are you bullish or bearish right now, short term, midterm, and long term on Bitcoin?
Yeah, I think we're going through a phase transition. Bitcoin's gone through many. Probably the last great one was the start of 2013 when futures arrived with BitMEX, and that changed the complete dynamic of trading. And then the next phase transition was the introduction of institutions in a big way with MicroStrategy that led with a lot of credibility amongst hedge funds. So we had Ruffer Invest, any number of hedge funds and high net worth people in that space, like Ray Dalio came out and said he was investing. So there was then this validation, so a lot of spot investment from institutions and family offices which happened in pretty much 2020, and now we're in this phase where I would say another transition where the market's maturing, getting more sophisticated. We've finally got an ETF. Unfortunately, it's a futures-based ETF. We've got significant volume on the CME futures exchange, so we've got very large, I'd say, Wall Street players that trade it on the futures market, and that is having very large influence on the price. And so that last 69,000 top, the market was still accumulating on chain, but that drive down to where we are now in the mid 30s, this is the first time that I've seen a significant move of this scale where on-chain lagged. So that's very interesting to me. The top was really from a different market, quite different from tail end of 2020. No matter what the futures markets were selling down on, the tidal wave of money coming in, buying spot, withdrawing into their on-chain wallets, overwhelmed the entire market. So it's interesting now, and it comes in a time where structurally we're like a lot stronger than the last top, where the whole thing capitulated under the China sort of mining ban and all this negative ESG narrative. Now it's different. It's just futures selling down while everyone's holding on to their coins. We saw a little bit of hodlers sort of divesting a bit, but nothing major. And so if you look at that in the macro terms of demand and supply, the guys that have held their coins for a long time, like 5 months or more, they're not selling, right? Like it turns out anyone who's held their coins for 5 months aren't selling. The history shows that they sell once there's profit to be had. Why not, right? You've held your coins for 5 months. You're not going to sell now. So we saw a bit of that selling as we ran up to 69,000. They bought, in the sub 40. They made a nice profit. And the moment we dipped it below the 40,000, they stopped selling. Actually, and they started accumulating actually as a cohort. Structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric. In the shorter term, we're in a really interesting phase right now where you can look at the strength of the different types of cohorts of investors. You've got swing investors, you've got the hodlers. The hodlers stack, they keep accumulating. Very seldom they divest a little, but there's the speculative guys that buy and sell almost on par. They will zero out. They don't care about the asset, holding it long term. And you can compare their strength of holdings, like are they accumulating, are they dumping? You can measure their strength, and right now they're holding and accumulating, and you can compare that to the price, because there's a very strong correlation between their behavior as holders or sellers and the price, and actually it leads it. And so the price is sold down so low, and their level of holding hasn't budged that much, and in fact it's rebounding from a little dip right now. It's put us in I call it kind of like a total eclipse of the sun. It doesn't happen very often, but it's happening right now. Both of these types of cohorts, peak levels of holdings versus the price, the differentials at that peak, it's like 2 standard deviations from the norm. Last time we were in this zone was in October. Before that, very briefly, was the bottom wick of the COVID crash. Before that was the bottom wick of the 2014 bear market, which happened in January 2015. And before that, it was 2012, when Bitcoin traded at $5 before the 2012-13 bull run that led to $1,200. So in the short phase, shorter term, we're at kind of a peak oversold. It might take 2 weeks for that to take effect, maybe more. Like probably by the end of this month, I think it might take effect.
Is the Fed relevant to Bitcoin, right? The monetary policy, do you think it's relevant?
Yeah, I think it's short term. Like it creates a lot of ripples in equities, and we're highly correlated in the short term sense of it. On the long term, also, like it's highly inflationary. I think there's some amount of people that hold for that reason, but you won't see that price respond to that very, very quickly. And so right now we're in this really highly correlated zone with equities, very much like mid-2019, post-COVID. Oh no, it was just trading correlations to risk on, risk off way before COVID. So it was, 2019 to 2020, we just went sideways and it went up and down based on correlations to equity. No one really saw, unless you were on-chain analyst, no one really saw that there was a lot of accumulation coming that was not reflected in price. And so you can kind of think of the short-term price as it's a random walk. I don't believe in efficient market theory that all the information's priced in. I think of it as just a bunch of traders trading what will make them the most money. With a lot of people going short, can I squeeze them out? Or markets going this way, I'm going to trade that correlation, especially with these kind of institutional traders in there. They're going to trade these correlations because that's what they do. And so it's like this pogo stick going up and down, and whether they jump or they don't jump any one day is dependent on how they feel over equities.
If everyone's looking at the S&P for an idea of how Bitcoin might move, which previously I don't think 2013 they were doing that, right? But today they are. Is there anything that we can see on chain that might help us interpret how positioning in the legacy markets might unfold?
I don't know. I don't think so. Bitcoin's too small to impact legacy markets. It's way too small. Yeah, it's more the other way around. But then Bitcoin's got an internal engine of its own, which is its own adoption S-curve, right? And so we're now in the early mainstream. So this thing's going exponential. So that thing is driving the engine house of Bitcoin. Meanwhile, you've got institutional traders that do not acknowledge that. They're not venture capitalists. They're trading correlations. You're on this pogo stick. They don't realize that the pogo stick's jumping up and down on a bit of land that's rising and rising based on this adoption S-curve. So eventually, it's risk off. We should short. Meanwhile, the ground won't let it. They're going to bottom out and the thing springs up. And that's what happened in October. We actually reached the fundamental valuation where the spot investors were like, I'll buy that. It's been 10,000 for so long. And they've been buying and buying for over a year. And so it bottomed out and the thing had to squeeze upwards. And now we're back in this sort of price discovery where there's spring to bounce on.
That's a great question. We're in price discovery now as to where it will be until the next move up, like to your point, as the floor rises up. And so if the S&P crashes this year due to the Fed policy, et cetera, what do you think happens to Bitcoin? What do you think a bottom is when you look at the charts, right? Where do you see a bottom based on the previous accumulations, et cetera? Where do you see a bottom happening in this particular cycle?
Well, on-chain's not very good at looking at price targets. You tend to go technical, or you can look at behavioral and see what price people bought in, but it's not very accurate.